Welcome back to the Pro Ticker Podcast, your Friday morning edition covering major financial magazine headlines, everyone. Today, we're going to take a deep dive into some fascinating stories, kind of shaking up the markets, everything from airline earnings to aerospace giants hitting new highs. We even got a surprise move by the Bank of Japan and some Trump-fueled crypto speculation. We got a stack of articles from MarketWatch, Barron's, and Bloomberg. So buckle up because things are about to get interesting.
Yeah, it's really amazing how these seemingly unrelated stories are all part of the same intricate financial web, and today we'll kind of unravel those connections and see how a company's success or struggles can be influenced by everything from global economic trends to political pronouncements.
Absolutely. And, speaking of struggles, let's jump right in with a company that's making headlines for all the wrong reasons, American Airlines. MarketWatch reports their stock took a pretty steep dive down 8% after they released their first quarter guidance for 2025. They're projecting an adjusted loss per share of 20 to 40 cents, which is a lot wider than the 4-cent loss analysts were expecting. Ouchie.
Yeah, on the surface, a loss is never good news, but the MarketWatch article also highlights an interesting perspective from Raymond James analyst Savanthi Sanaif. They point out that while the loss is grabbing headlines, the airline's revenue outlook is actually quite strong.
So it's a tale of two metrics, a projected loss but potential revenue growth. According to MarketWatch, American is still forecasting a 3 to 5% increase in revenue for the first quarter, and their full-year revenue growth is projected to be somewhere between 4.5 and 7.5%. Help me understand this. How can they be projecting a loss while still expecting revenue to grow?
Right. Well, that's where understanding the nuances of financial statements comes in. A company can boost its revenue, the money it's bringing in, but still end up with a loss if its expenses outpace that revenue growth. In American Airlines' case, several factors are driving this projected revenue increase, even with the projected loss. MarketWatch mentions indirect revenue recapture, meaning they're finding ways to bring in more revenue. From sources like baggage fees and onboard sales, they're also benefiting from continued strong demand for air travel and a generally favorable industry backdrop.
So it's not all doom and gloom for American. MarketWatch even quotes Citi analyst Stephen Trent, who sees this as a potential buying opportunity. He's even added American Airlines to Citi's focus list, signaling that it's a stock worth watching closely. It's also worth noting that American just reported record revenue in Q4, and this comes on the heels of their competitor United Airlines reporting positive results early this week. Is there a chance American could pull off a turnaround?
Well, the airline industry is notoriously volatile. It's highly sensitive to fluctuations in fuel prices, economic conditions, and travel trends. But the fact that some analysts see potential in American Airlines, even amidst a projected loss, tells us there's more to the story than a simple headline.
Okay, so let's shift gears now and talk about a company that's riding high GE Aerospace. MarketWatch describes their stock as soaring to 18-year highs, with an impressive 6.6% jump after they released strong fourth-quarter results and some very positive guidance for 2025. What's driving their success?
Well, GE Aerospace is a great example of a company capitalizing on a favorable market environment. Their commercial engine business is doing exceptionally well, and they're very clearly focused on delivering value to their shareholders.
MarketWatch highlights their plan to buy back $7 billion worth of stock in 2025, and their announcement of a 30% dividend increase. Those are some pretty significant moves, but I'm curious, how did that stack up against their competitors like Honeywell and RTX? MarketWatch points out that those companies actually offer higher dividend yields. Is GE doing enough to attract investors?
Well, dividend yield is an important metric for investors, no doubt, but it's not the only factor they consider. GE is projecting some very strong earnings per share EPS growth for 2025, exceeding analyst expectations with a range of $5.10 to $5.45 per share, according to MarketWatch. That kind of growth potential can be very appealing to investors, even if the immediate dividend yield is slightly lower.
So it's a trade-off between short-term yield and long-term growth potential.
Exactly. And we can't forget that MarketWatch also reported a 14.3% increase in GE's fourth quarter revenue. That's a clear indication that they're executing well and benefiting from the overall growth we're seeing in the industrial sector.
It's fascinating to see these contrasting stories playing out. One company battling headwinds despite positive revenue projections, while another is riding high on strong earnings and shareholder-friendly moves. It really highlights the importance of looking beyond the headlines and understanding the nuances of financial performance.
Absolutely. The market often rewards companies that demonstrate a clear strategy for growth and profitability, even if the path isn't always perfectly smooth.
Now let's zoom out and look at some of the macroeconomic forces that are shaping the financial landscape. Bloomberg is reporting that the Bank of Japan, or BOJ, made a move that surprised many. By raising their key policy rate to 0.5%, this marks their third rate hike in just a year.
It is interesting, because while it might seem like a sudden shift, Bloomberg also points out that this rate hike was actually widely anticipated by the markets. BOJ Governor Ueda had been signaling this possibility, and market pricing already reflected the expectation of a hike.
So the market was prepared, but it's still a significant move. Bloomberg mentions that the yen strengthened after the announcement, briefly reaching 154.85 against the dollar. Can you help us understand the link between interest rates and currency valuation?
Sure, when a country raises interest rates, it makes its currency more attractive to foreign investors who are seeking higher returns. This increased demand for the currency leads to appreciation, which is what we saw with the yen strengthening. The BOJ also seems to be taking a more bullish stance on inflation, and the expectation of further rate hikes is contributing to the yen's upward movement.
Does this mean the BOJ is finally joining other central banks in tightening monetary policy? We've been seeing this trend globally as central banks try to rein in inflation.
The BOJ's actions certainly suggest they're moving in a similar direction, but it's important to remember that each country faces unique economic challenges. The BOJ has to balance the need to control inflation with supporting economic growth, and their approach may differ from other central banks.
It's a delicate balancing act for sure. Now let's switch gears to a topic that's always generating buzz: cryptocurrencies. Barron's is reporting that crypto markets are seeing a surge, potentially fueled by none other than former President Trump and his very vocal pro-crypto stance. They even mentioned his plans for a national Bitcoin stockpile.
Trump's endorsement has definitely injected a dose of optimism into the crypto world. Barron's explains that this has led to speculation about wider adoption of cryptocurrencies and the possibility of more crypto ETFs being approved.
Speaking of optimism, Barron's also quotes BlackRock CEO Larry Fink, who predicts a staggering 600% surge for Bitcoin. And they highlight all the recent filings for XRP ETFs by firms like 21 Shares, Bitwise, and WisdomTree. Are we about to see a flood of new crypto ETFs hitting the market?
It's certainly possible. There's a lot of talk about new spot ETFs, particularly those focused on what are sometimes called second-tier cryptocurrencies like Solana, Hedera, and Litecoin.
But Barron's also points out that JP Morgan doesn't share that same level of enthusiasm. They believe the interest in these smaller crypto ETFs will be much more subdued compared to the ETFs focused on Bitcoin and Ethereum. So is Bitcoin still the king of the crypto hill?
Bitcoin and Ethereum undoubtedly remain the dominant players in the crypto ecosystem. But that doesn't mean there isn't space for other cryptocurrencies to carve out their own niches. It'll be interesting to see how this landscape evolves. However, Barron's raises a thought-provoking point about the potential risks of a future that's too heavily reliant on Bitcoin, particularly its potential impact on the US dollar's status as the world's reserve currency.
That's a pretty significant what-if to consider. We've covered a lot of ground today. Airlines facing challenges, an aerospace giant soaring, a central bank making waves, and the always unpredictable world of crypto. That's a lot to digest.
It is, but that's what makes the financial world so fascinating. It's constantly evolving, presenting new opportunities and challenges, and demanding that we stay informed and adaptable.
So as we wrap up this whirlwind tour of the financial headlines, what are the key takeaways we should be watching for in the coming weeks?
Well, for American Airlines, it all boils down to execution. Can they actually deliver on those revenue projections? And even if they do, can they translate that top-line growth into actual profitability, or will expenses continue to hold them back?
And what about GE Aerospace? They're clearly on a roll right now,
Right.
but can they sustain that momentum? Will their focus on earnings growth and dividends be enough to satisfy investors, especially when they have competitors offering higher yields?
Yeah, and the global interest rate environment is another crucial factor to watch. Will the BOJ continue on this path of rate hikes? And how will that impact the yen? Especially considering the unpredictable nature of U.S. politics right now.
And of course, the crypto world is always full of surprises. Will Trump's pro-crypto stance actually translate into any concrete policy changes? Will we really see a national Bitcoin stockpile become a reality? And will all this hype actually lead to wider adoption of cryptocurrencies? Or is it just another speculative bubble waiting to burst?
Those are great questions. And honestly, I don't have a crystal ball. But that's what makes following the financial markets so exciting. It's a constant game of trying to anticipate what's next.
Well, I've certainly learned a lot today, and I'm sure our listeners have too. Thanks for breaking it all down for us.
It's always a pleasure to dive into these topics with you. The more we understand how these different forces interact, the better equipped we are to navigate the complex world of finance.
We've covered a lot of ground today. Companies exceeding expectations, others falling short, central banks making bold moves, and the ever volatile world of crypto. It's clear the markets are responding to a whole confluence of factors, from individual company performance to global economic trends, and even the pronouncements of influential figures. But the thing that really sticks with me is this: with the market seemingly at record highs, are we on the verge of a correction, or is this just the beginning of a new bull market? Food for thought as we head into the weekend. Thanks for joining us today, everyone. We'll see you all tomorrow morning with new headlines from major financials magazines.